While Finbond Mutual Bank operating profit from continuing operations increased by 51% to 20,500, or rather million rand. Revenue also rose by 33% to 138 million rand. Now on the line, we're joined by Chief Executive Vili van Aert. Vili, thanks so much for joining us. Looking at your numbers, strong numbers coming out throughout, but what surprised me the most is that you don't have any concerns regarding unsecured lending. As a matter of fact, you're looking to expand your loan range. Just exactly what does that entail?
We focus on the shorter in terms sector of the market. Our average loan sizes currently are standing at 3 months, so the average tenure is 3 months, and then the average size of our loans is approximately 1,600 rand. So if we say we want to look at its extending tenure slightly, is we're also looking to extend loans in the 12 to 24 month space, but on a very conservative basis. As you would have seen in the SENS announcement, our rejection rates, in other words, clients who apply for a loan but then gets rejected, in our 3 to 6 month loans range between 43% and 56%, and on our 12 to 24 month loan range, it ranges between 82% and 92% of customers that apply but do not qualify. So yes, we want to extend our loans and grow our market share in the shorter and medium term sector, but on a very conservative basis.
Vili, you also mentioned there, that you have a significant, or there's a science of profitable unsecured loans, and it seems as though the secret for your company is having shorter repayment periods. Just exactly how does that work?
Just repeat, Gugu.
It seems as though the secret to the science of your success is the fact that you have shorter repayment periods with regard to your loans. How exactly does that work versus the likes of your competitors like Capitec?
Yes, no, that's 100% correct. I mean, we focus on the shorter term, so 92% of our loan book is 6 months and below, and about 55% of our loan book is below 3 months, and then we also have a very large 30-day segment. So we focus on the shorter end of the market. Our vintage curves and write-off vintage data just showed us that the shorter the tenure, the better the write-offs. In other words, the shorter the term of the loan, the less likely it is to become bad debt.
Vili, just before we go, your thoughts on new innovation. I understand that you're looking to expand, but only in the local market. Any future growth that we might see on the African continent?
At this moment, Gugu, we're only focusing in South Africa.
How come, Vili?
Excuse me?
How come?
It's just we know what we're doing in South Africa. We've got experience in South Africa. We've got a very successful model in South Africa. And I would say, after we've, expanded properly in South Africa and built a proper base, then we will potentially, in the medium to longer term, look at going into Africa. But at the present moment, our focus is on South Africa. We believe we can open a further 40 branches per year in South Africa, and we are geared for that in South Africa.